and I think the next move higher, you could see it beginning immediately. I think we're in the bottoming, we're digging on that $29 level as we speak. I think this is going to bring us probably to the 34 to 37 level. We'll be overbought, and you'll see another pullback. And then I believe that 32.50, the previous high, or 32 range, will again be the support. So this is it's totally natural. Anybody who was disappointed that gold or silver didn't keep going once it hit 32, 32.50, you don't understand how markets, normal markets work. And
silver prices staged a notable comeback on Thursday, erasing Wednesday's 0.46% losses. Currently trading near the crucial $29 psychological level, silver has registered gains of 0.83% at the time of writing. Over the past few days, the price action has formed a quasi tweezers bottom candle chart pattern. BillHolter, a former retail stockbroker with 23 years of experience, comments that the pullback to $29 was expected, as markets rarely move upward without corrections. He anticipates the following upward movement to commence soon, likely propelling silver to the $34 to $37 range before another pullback, with $32.50 potentially becoming the new support level. Meanwhile, the gold market holds solid gains but is largely unresponsive to stable economic activity. The first quarter's GDP expanded in line with expectations, yet the gold market reacted little to this benign data. August gold futures last traded at $2,331.20 an ounce, up 0.78% on the day. Holter notes that both metals were heavily overbought for a considerable time, making a pullback inevitable. Additionally, influential forces prefer to suppress gold and silver prices due to their competition with fiat currencies. The silver market, known for its recent price volatility, has faced significant regulatory and legal scrutiny. A 5-year probe by the U.S. Commodity Futures Trading Commission into allegations of bullion bank manipulation of silver futures found no wrongdoing and was dropped last September. Similarly, a federal appeals court dismissed a class action antitrust lawsuit with related accusations last month. This dismissal coincides with ongoing regulatory investigations into the setting of London's daily gold and silver price benchmarks, prompting the industry to seek alternative pricing methods. Join us as we delve into BillHolter's insights. To stay updated with our latest uploads, subscribe to our channel and activate notifications. Thank you.
As far as the metals are concerned, they broke out. I put an article out on May 11th. Not an article, basically. I put it up on my website. I showed some charts and said that it is likely that gold would go to new highs, silver would break over $30, and that did happen. We got up to about $32.50 on silver. We got to $24.50 on gold. They were both severely overbought, and were overbought for a fair amount of time. So those gains were naturally going to be digested. And of course, you got the powers that be that don't want higher gold, don't want higher silver prices because they're direct competition to fiat. I think it was last Friday. There was basically the amount of silver that's mined in a year's time that was equal to the amount of trading that was done on COMEX on Friday. So, I mean, it was they smashed this with paper again. I did put an article up, I believe it was Sunday or Monday, with the same charts. We're definitely no longer overbought. We're closer to oversold than overbought. Silver, well, first we'll start with gold. Gold has pulled back to this 2280, 2300 level. So we've had a pullback there. Silver has pulled back. I think it got down as low as 2875, 2880, something like that. And on the chart that I showed, there's definitely support at the 2850, 29 level. And there's a moving average that's right here at 29. And if you look at what I talked about in the first article, the MACD, the moving average convergence divergence, has declined, and at this point, fairly close to forming another hook to turning to the upside. So silver pulling back to 29 is absolutely where you should have thought that it would pull back. I mean, nothing goes straight up. Nothing will go straight up until we have a revaluation. Then it'll be like a light switch, and poof, you'll have new prices that are totally unrecognizable. On this move, on the next move higher, and I think the next move higher, you could see it beginning immediately. I think we're in the bottoming. We're digging on that $29 level as we speak. I think this is going to bring us probably to the 34 to 37 level. We'll be overbought, and you'll see another pullback. And then I believe that 32.50, the previous high, or 32 range, will again be the support. So this is it's totally natural. Anybody who was disappointed that gold or silver didn't keep going once it hit 32, 32.50, you don't understand how markets, normal markets work. And these are not normal markets. But when you get as severely overbought as we were, you're going to get a pullback, and we have had that.
As gold prices reached an all-time high in May, many attributed the rally to China's influence. A key factor cited is the People's Bank of China increasing its gold reserves for 18 consecutive months. Officially, China claims to hold around 2,700 to 2,900 tons of gold. However, BillHolter suggests that considering China's annual domestic production of approximately 400 tons and substantial imports through Shanghai, their actual reserves could be much higher, possibly 25,000 to 40,000 tons. Many analysts have long speculated that China holds more gold than it reports. In 2015, Jim Rickards highlighted on Mises Daily that China might keep several thousand tons of gold off the books in a separate entity called the State Administration of Foreign Exchange. This suggests that a significant amount of gold is flowing into China, while the country exports very little. Recent reports indicate that BRICS nations could back their new currency with gold rather than the US dollar or other local currencies. The alliance aims to return to the gold standard and support a multipolar world for trade and transactions. Holter notes that if gold constitutes a significant portion of the BRICS currency's backing, a large amount of gold will be required, or the price will need to rise significantly to support the currency. Let's get back to the interview.
You're already seeing the cash markets, the jaws are starting to open between the cash markets and the paper markets. And what's happening is you're having buying on LBMA, buying on COMEX, getting metal delivered out, and it's being shipped to Shanghai. It's an arbitrage. So I think you're already seeing that, and going one step further, and this is the big step. There's questioning now of the amount of gold held by China. I think they say they own like 2,700 tons or 2,900 tons or something like that. And I'm going to say it was like 5 or 6 years ago, on the back of a napkin between what had been, first off, remember that almost nothing gets exported. There's no gold that gets exported from China. They have production of roughly 400 tons per year. And if you look at the Shanghai imports, I mean, those have been, sky high, 1,000, 2,000 tons per year. So even if you look at just the 400 tons per year that is produced within China, I mean, over 10 years, that's 4,000 tons. And there's been a concerted effort to produce gold in China since the early 2000s. So, on the back of it, I could have shown you where China had 25,000 tons already. So, they're probably 30, 35, 40,000 tons at this point. Once the BRICS currency does get released, and they have said that gold is going to be one of the components that backs the currency. Now, one of the questions is how much, how big of a percentage? Is it 20%? Is it 40%? I don't think it'll be more than 40%. But then you got to do the math, because if the BRICS currency is what settles trade worldwide, there's got to be a lot of currency. And that means there's got to be either a lot of gold, or the price of gold has got to be a lot higher for the gold that's actually backing the currency. So long story short, I do think that for their own benefit, if you're sitting on 30, 40,000 tons of gold, wouldn't you want to revalue that higher at some point? So yeah, I think absolutely China is in their best interest going to revalue gold higher. And one of the things that does is it makes it really hard for anyone to catch up to their hoard because it's so costly to purchase each ounce. So, I mean, if they revalued it to pick a number, 10,000, 20,000, 50,000, whatever, it would make it really difficult for nations that didn't have gold but want gold to catch up in the game.
Given the potential for significant shifts in the precious metals market driven by China's substantial gold reserves and the BRICS alliance's consideration of a gold-backed currency, how do you foresee these developments impacting global economic stability and the future of fiat currencies? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.